We have 739 homes for sale in Sac County that falls under that category. Now let me see how many new listings came on the market since last week. Let's go here. Oh, and then here. Hold on. Let's do a whole week, huh? Yeah, a whole week. 262 new listings, Lisa.
That's good stuff. It
Not
sounds like a
bad.
lot, but it's not a whole lot because you got to think about all the families that are
Actively
looking for
looking.
homes. I mean, just in our pipeline alone, we have probably over 200 people already that's looking for homes, right, Tia?
Mm-hmm. Yeah, so it's pretty
First come,
crazy.
first serve. Hmm.
Uh-huh. And watch. Let's see how many homes closed just this last week. So you guys could get a better picture. Just this last week, 306 homes sold.
Yep.
See, so it's not even catching up. New listings coming on the market is not even catching up.
Exactly.
It's
That's why I was like,
falling
it seems
behind.
like it's a lot, but it's not.
And look, let's go to the pendings. Even the pendings is probably gonna be super like for just this last week. 367 homes pending right now.
Wow.
Yeah, see, so those new listings, man, don't even cut it.
So as soon as they hit the market, they're gone.
They're
So
gone.
you got to be super prepared to get everything in time. Otherwise, you're
My
going to be behind.
goodness. Yeah, that's insane. Okay, hold on. Let me do something real quick. Okay, got it. And that's it. That's a market update for you guys. Not much change. Not much change at all. So, um, yeah, I guess we could begin with the next topic. What do we got for the Chi fams today, Lisa?
Well, Chi Fam has been so good to us, and we got so many great
Yeah.
responses from the last time when we were doing with fun with numbers. And again, I know sometimes numbers can seem a little overwhelming, so I like to break it down to make it seem a lot less overwhelming, a lot more simple for the masses. I want to show you, hey, what it takes to be an investor. What are you looking at? And we're going to have some more fun with numbers today on the investment side. Yeah, how does that sound, Chi Fam?
Oh yeah, that'd be great. That would be awesome. Um, little bit of housekeeping, Chichi fams. If you guys didn't hit that like button yet, make sure you guys do that. It helps a lot. So that way YouTube's algorithm could drive this out to many more other people that needs to know this information. Okay, so if you guys could do me a quick favor, hit that like button. Okay. Otherwise, if you guys have other questions, put them in the live chat. So that way we can answer them and interact. Yeah, our last live stream was what 2 weeks ago. Yeah, sorry we missed last week. I was super busy. We went camping. That was pretty nice. We rented an RV for the first time just to try it out. It was so much fun. Makes me want to buy an RV
Nice.
now. Yeah, makes me want to buy an RV. It was so nice. It was so nice. But okay, well, go ahead, Lisa. You got the floor. So share
Okay.
your screen and let's let them know what we're gonna be talking about today and go from
Okay.
there.
All right. All right. Well, Chi fam, thank you so much for joining us today. And I'm going to go over this quickly. So if you have any questions, we'll be more than happy to answer that for you towards the end. So I'm going to look at a couple of options for you here. Just keep in mind, okay, this is for anyone with a 740 credit score and above, no other debts, no cars, student loans, credit card debts, and working 40 hours a week. Okay. If you do have any scenarios that are outside of this general scenario, absolutely reach out to me, ping me, and I'll be more than happy to price it out according to your situation. Okay. So today we're going to talk about investments in single family, duplexes, triplexes, and fourplexes and what they are. So in order to do a residential loan, any unit that's 4 units or less is considered a residential loan. And I can absolutely help you with that. The interest rates for investments properties are higher. So you got to take a look at all of that, take a look at the numbers, see if they work for you. We're going to talk about this a little bit later. I'm going to go ahead and go down the columns here. So let's say the average home prices the last time Chia pulled out was roughly about $450 in the Sacramento area.
Like
Let's say
436 around there,
right.
430s around there.
Okay, so 436-ish. Okay, so if you're doing an investment property and you're purchasing a home, let's say it's at 400,000. In order to do an investment loan, you do have to put a minimum of 20% down, okay? And this is where these numbers will make a little bit more sense as we go down. So your monthly payment with property taxes, insurance, principal and interest and everything is going to be a little shy of $2,000 here, okay? That's with you putting 20% down. That's $80,000 that you're putting down. With closing costs, we talked about all the closing costs the last time, so I'm not going to go over it again. But with everything combined, you're looking about a little shy of $90,000. What does that get you? If, let's just say, for instance, 400,000 is basically almost like a 3-bedroom, 2-bathroom, wouldn't you say, Chia?
Yeah, around there. That's typical
Okay.
medium home.
Right, 3-bedroom, 2 bathrooms. It's going to rent roughly on average about $1,800. Okay, and if that's the case, okay, every single month, your monthly income is what we also call your cash flow. That means you're cash negative at almost $147, because if you're earning $1,800 every single month, but your mortgage with everything is almost $2,000, okay?
For that $2,000,
Mm-hmm.
C is asking how much higher are the interest rates compared to primary, since this is an investment property.
So the primary rates right now with this scenario here is roughly about 2.75. So it's a big difference. It's a big difference because with the economy being the way that it is, with the eviction moratorium stretched out again, banks are a little bit more wary. So that's the whole reason why for investment properties, they're going to ask you to come in with a lot more money. Okay. Instead of the normal first time buyer, you're getting to put 3% down, 3.5% down, and 5% down like we did the last time. So the interest rate is roughly about 3.5% for a single family residence right now. Before COVID hit, it was probably about a quarter of a percentage difference. Now, as you can see, it's a good difference. Okay. For me, whatever the interest rate is going to be, if you're making more money off of that, it shouldn't matter as much. So I'm going to go over that in a little bit, okay? So now that you are cash flowing negative, you also want to consider, okay, when an investor looks at this, you have to take a look at your risk tolerance. So if you're looking at your income and you're like, you know what, $147 every single month, not a big deal. If you're someone that's in your 20s and your 30s or even in your 40s and you do nothing else and you buy one investment property, think about it. In 30 years, you won't have this mortgage anymore, okay? If you don't have this mortgage, you just saved yourself almost $1,500, and that is more money in your pocket.
And
I feel like
remember, this is an investment property, right?
mm-hmm.
So that monthly payment is not technically for you to pay. It's for your tenants.
Exactly.
Okay. So remember that, Chi fams.
Mm-hmm. So based on this, you can ask yourself, like, oh, okay, if I'm going to be in the hole every single month, I might not want to do that. Or if your income is totally fine and you're thinking, okay, it's basically I'm putting in another $147 every single month in order to earn equity. I also price this out so that it's more simplified. This isn't even based on real estate increasing. This is based on that this property is just going to stay this price, the price that you bought it at, $400, 400,000. I'm sorry. Okay. So we're going to base it off of that. Now, in the same situation, okay, and I'm going to go up here and show you what type of income it takes. When you're doing an investment property, one of the greatest things, and when you're looking at how much income you can earn, okay, let's go back. You have one unit, okay? So it's earning you $1,800. The bank will count 75% of this income, this future rental income, into your debt to income ratio. This is important because if that's the case, you really only need to make a household income of $31,200. That's $2,600 a month or $15 an hour. How cool is that to be able to buy your first investment property, right?
Wow. That's not
Mm-hmm.
that's not bad.
That's not bad at all. So let's take a look at option 2, okay? In option 2, duplexes are on average roughly about 600,000, okay? When you're buying a multi-unit, any unit that's not a single family residence, 2, 3, and 4 is considered a multi-unit, you're going to have to put a minimum of 25% down, okay? The interest rate is higher on the multi-units. Per month, you're paying a little over $2,800 right here, okay? Your out-of-pocket cost total with closing costs and everything like that, a little shy of 162 here.
Mm-hmm.
Let's assume that because it's a multi-unit, typically they come with a 2-bedroom, 2-bathroom, so the rent is going to be a little bit less. Let's say on average for a 2-bedroom, 2-bathroom, even an apartment is roughly about $1,650. Okay, so your earned income is $3,300. Guess what? Now, because your monthly is only 28, 22, a little shy of that, you're now cash positive. Okay.
Yeah, cash flow.
Yes, look at that. Now you're almost getting $500 every single month. Your annual percentage income earned is 3.55%. This is how much your income is on an annual gross. And if you keep it for 5 years, okay, and again, if you keep it for 5 years and it doesn't increase in value at all, this is the type of money that you earned in the last 5 years. How cool is that, right? You earned 17.73% in those 5 years.
That's almost a full-time income
And it
for
gets
some
better.
people.
And it gets better. Remember earlier we mentioned the bank will count 75% of this
Yeah.
income, which goes up to here, which
Is
means
it
if you
always cap at 75%, Lisa? Sorry to bother
right now,
you.
yes. Yeah, no
Got it.
problem at all. This is the guidelines right now. Guys, the guidelines do change. So this is what it is right now. And because this is 75% of this income that gets to be counted, also keep in mind, if you're buying a property that's like really in a rough part of town, the rent may be a lot less too. So it's always very important to see, okay, what is the projected rent that you're going to be getting so that these numbers may change up or down, okay?
Yeah.
Imagine, guys, okay, if you're putting $162,000 into a property and you're earning this much and eventually you won't have that mortgage anymore, how awesome would it be if you had a couple of these properties that earned you this, right?
Yeah.
And look at this. Because the 75% income that's calculated, you need a little shy of 39,000, which is about $18.47 an hour. This is one person, not two like the last time that I did for you guys. Everybody see that?
Wait, this is one person.
This is only one person's income that's needed.
Oh man, what's a credit? Are you gonna show us
The credit is
budget
740.
sheet? 740.
Yeah,
No debt.
740. Yeah. The budget sheet is going to be totally separate because it's very, very specific per person, Chia. Okay. So we'll leave it that as it is right now to make it simplified. Okay.
Okay.
Let's take a look at option number 3. So what is the trend here so far? The more units that you have, the more money you make, right, guys?
That should be it.
Okay. And because you do have to put in 25% in this situation, triplexes run in Sacramento roughly about $750. Your monthly payment is going to be a little over $3,500 here. Closing costs and everything, you're looking a little over $200,000 that you're putting in. Same thing, rent as $1,650. You're earning almost $5,000. Look at this now. Your monthly income is almost $1,500. That means your annual percentage income is 8.64. And if you keep it for 5 years, your percentage earned is 43.22, and you're making almost 87,000 without even having to sell this property. How cool is that?
That's pretty cool. Before you go on to the next, Sadie has a question.
Yeah.
What's the county loan cap for multifamily currently?
So it's different on each one of these. Okay, it's different on each one. I'd have to look that up for you guys, but it's a good amount, and all of these will fall into that category.
Cool.
Okay.
There you go, Sadie.
And again, this income right here, 75% of that earned income. This is the annual, less than $40,000. One person's income will get you this. You only need to make $19.04.
Oh my gosh, that is
How cool,
ridiculous.
right? And a lot of times I'm sharing you guys this because people think that it's so difficult, that it's so hard to get into these things. It's like, I can't even buy my first home. How can I be an investor? Well, this is how. If you're already living in a condo, if you're already living in an apartment, how cool would it be for you to kind of rent or kind of own your mini apartment and rent the rest out and have it pay for itself, right? Okay, so let's go to option number 4. This is the 4 unit. Okay, 4 units are running about $1 million, and my Bay Area people.
Before you begin with that, sorry.
Sure.
So, to some of you guys right now that are watching Chichi Fams, if you guys are saying, "Man, how am I gonna be able to afford that, or ever be able to like get up to that point to own a duplex, a triplex, or a fourplex?" I made a video a couple of days ago about not buying your dream home. And in that video, I show actual numbers at if you were to purchase your home, let's say 2 years ago, and with the equity that it's actually worth right now, you didn't do any refis or cash out within the last 2 years, and you use that whole equity on the sale of that home that you've owned for 2 years as a down payment for like your new home, you would have been able to purchase something like this, and the payments would still be similar to what you paid for your home 2 years ago.
Yeah.
And so, like, it's possible. That's why I always tell first-time home buyers that your first home, it's not going to be your forever home. Majority of first-time home buyers, they're going to change the way that their lifestyle is. They're going to grow their family. They're going to have better careers. And what happens when we make more money? We tend to want to spend it more, right? Or get a bigger house, get a nicer car. And if you could have just been able to like use that first home as a stepper up home and then start building your portfolio from there on out, it's so achievable.
Yeah.
So yeah.
It absolutely this is. I'm pricing this out for you. This is ideal for those of you who already own a home and you have built so much equity that you can pull out money. And that was my next point that I was going to show you. Well, where are we going to get all this money, Lisa? Where are we going to get 200,000 or 267,000? You can absolutely use the equity in your current home if you already own one to be able to do this. And guess what? Let's take a look at the fourplex. Okay, if you were doing this, your earned income is roughly about 6,600. Okay, 75% of that. Your annual income only needs to be a little shy of 54,000. That's $25.96. Okay, to be able to buy $1 million multiplex, your very own mini apartment complex. Okay. Per month, you're making almost $2,000 here. Now, a lot of you guys are looking at your own mortgage and saying, hey, my mortgage is roughly about $2,000. How cool would it be if your investment property was not only able to pay for itself, but also pay for your own mortgage that you're living in right now? How cool would that be?
That'd be super cool.
Right?
Sadie's asking, does your sheet show ROI, rate of return on investment?
It absolutely does. It absolutely does.
I don't see it.
It's right here. So I call it a little bit different because not everybody understands the term of rate of investment. Okay. This is your ROI right here. It is 8.76. Okay. This is your annual earned income. If you keep it for 5 years, you earn almost
Zoom in
43.
a little bit.
Oh, okay.
Zoom in a little bit. Can you open up that Explorer? Just make it full screen on the Excel sheet.
Okay.
There you go.
Can you guys see it better now?
Yeah.
Okay.
A lot better.
Okay. All right. So this is your annual ROI rate percentage. Okay. This is your monthly ROI, in dollars. This is your annual ROI in dollars. If you keep it for 5 years, this is your annual or your percentage rate. And this is what you earn in 5 years without even having to sell your property.
Wow. 6
Isn't that
figures.
cool? And you take that money, if you don't use it for anything other than utilize that money to buy another investment property. So again, this is very ideal for those of you who already own a home and your home is earning equity. Those of you that bought last year, the year before, it's really, really increasing. Okay.
Fast.
All right. So I want to share with you a couple other things too. For those of you who've never bought a home before and you're asking yourself, well, where am I going to come up with 90,000 or 162 or 200? You do not have to do that. Okay. So I'm going to go show
us how,
you.
Lisa. Show us how.
You could utilize an FHA loan to do this, guys. If you're a first-time buyer, this first option is still a conventional because for FHA loans, you have to live in the home. So the single-family residence will not work for an investors in using FHA. Okay, so that's why this is a wash. We're not going to go over that. We're going to go over option number 2 that starts out as a duplex, triplex, and
Can
fourplex.
you zoom in on that?
Yes, I can. Let's go ahead and open that up. Okay.
Zoom in a little bit more.
Sorry.
Okay.
Is it better now? Chi fam, can you see that?
Yep, it's a lot better.
Okay. So this one I did break it down because it does require more income. Okay. For an FHA loan, okay, even as because technically it is still it's a primary and an investment product all in one. So you can be a first-time buyer, you can live in it, and you can be an investor at the same time, which is very ideal for first-time buyers. If you're not looking for a huge house that, yard, you don't need any of that stuff, then if you are already living in an apartment, this is another way that you could do that. You only have to put 3.5% down. So again, using the same purchasing power as the last time, the interest rate is only 2.875. You know what? I apologize. I forgot to put in mortgage insurance on this one. So let me go ahead and do that real quick. Okay.
Seeing Lisa in action now.
Okay. Actually, no, it did come up. It did come up. But it's not populating on this side. So give me just a moment.
Excel gives me such a headache. I let people do it for me.
Okay. Okay, thanks for your patience, guys. All right, so let's go ahead and go back to this, okay? And this is when you're going to determine whether or not this is an investment that's worthwhile for you. So when you're looking at this, your monthly payment is going to be $35.71, okay? Everybody see that?
Mm-hmm.
And because you have to live in one unit, you're not going to earn as much on this one. Remember the last time when we were doing conventional, you get $16.50 on both units, but because you have to live in one, you're only going to get $16.50 on one, which is totally fine, okay? Your portion that you're going to pay for is almost $2,000, okay?
Okay.
Now you're doing a triplex. Now you're earning roughly about $3,300. Your side, you're paying less than $1,300. This is where it gets awesome, guys, because think about it. If you're renting a 2-bedroom, 2-bathroom, on average, it's already $1,650. Now you get your own place. You're renting it out. That cushions what your monthly true expense is. Okay. And on the fourplex, you're earning more, which now your monthly payment is only $1,130. So a lot of you out there, if you're already paying more than this in rent on your apartment, you may want to consider this option. Let's go ahead and see what your closing costs are going to be. Look, for a $600,000 purchase, you lead a little shy of $33,000. For a $750,000 purchase, you're going to need a little shy of $40,000. And for $1 million multi-unit, you're going to need a little shy of $51,000, which is much, much more attainable than the last one that we just did, right?
The 20% down.
Yes. Okay.
Can you
Here's
go
where,
back down?
yeah, sure.
Scroll back down. Why does it say negative 67, negative 77, negative 115? For is
So it
that
looks unattractive because we're used to this side where everything was positive, right? It's unattractive because again, you have to live in one unit, so you're not going to
correct?
earn as much. But the negative is not so bad because if you think about it, every single month, this is your only portion that you have to pay for. Keep in mind, you can absolutely refinance when your property increases and one, get rid of these mortgage insurances right here that already alleviates this portion for you completely. And if you buy this first, cash out, take that money, purchase your dream home, and rent this out, now the numbers are back to how it was with the other one, which
Yeah.
is giving you that cash flow that you're hoping for.
Always a step up.
Mm-hmm.
Always a step up.
Okay. So I hope that that helps you while you're looking and you're shopping for homes, that you work with somebody that really does know the numbers just as well and can fit it and can strategize and look at your situation and look at your income to say, hey, if I'm here, what are the best strategic plan for me to get to where I want later on in life? And it's not just about this one transaction, this one house. This real estate is supposed to be a vehicle that jumpstarts your wealth building, which is probably the easiest ones for you guys to do. And it's the most conservative. So after seeing all these numbers, I hope that you guys out there will understand. I was like, okay, it's not as hard. It's not as overwhelming. I could absolutely start with this. If I sacrifice that big house now, I get this first. You get to have that step up plan where you're not just building your primary residence, you're not just building your investment, but you're also building your retirement too, guys. Just think about it. If you're in your 20s, 30s, 40s, 30 years from now, when you hit retirement age and this house is already paid off on its own, you're getting income off of these properties. How cool would that be?
That could be a retirement plan right there.
Mm-hmm. Mm-hmm.
So yeah. And thanks so much for the questions, Sadie and C.
I loved Sadie's question. Sadie knows.
You sound like you're an investor too, Sadie. Is she local here?
She is. She
She is
is.
local.
Sadie's like family.
That's what's up. That's awesome.
Mm-hmm.
Your family to Lisa, your family to Chia.
Mm-hmm.
So since while we're waiting for other questions to come in, how do you feel about the eviction moratorium getting extended for another
Oh
month?
boy. Yeah, I mean, I don't like it at all. Um, just our friend, who had a situation herself. They tore up her house and everything like that. It's there to help people who really honestly need it. But if you're
Mm-hmm.
going to help the tenants, absolutely help the landlords too. If their tenants is not paying the rent, who's buffering for the landlords? I
I
think it
think
would be,
they're hoping that the landlords file for forbearance, right?
yeah, but it's not like it's free money for the landlord.
Right.
Right? It's not like it's free money for the landlord. At some point, when the loan is due and everything like that, every single month that they're in forbearance, they're going to have to pay that back. And it
Somehow,
goes to the
some
state.
way.
Yeah, exactly. And it's supposed to be that the tenant is supposed to do that as well. But if somebody is already having a hard time making that first month payment because they're not working, and once they go back to work, it's not all of a sudden, if they're paying $1,500 a month, all of a sudden that money is going to come in tenfolds when they find another job. It's the same thing with people utilizing the forbearance. It's not like all of a sudden they're going to come in with a large sum of money after 6 months after COVID hits. No, it's going to take that time to say, okay, I just got a job again. I am going to pay my rent going forward, but all the back due rent, what's going to happen to that? And how is
Mm-hmm.
that going to affect the landlord, right? So one of the other things is when you purchase a multi-unit or when you are an investor, make sure you vet your renters. Just like how your lenders vet you when you purchase the house, you got to vet your tenants as well. Make sure you take a look at their job, their income, their credit score, and all of that, so that you know that, okay, you have solid tenants, because there's risks to anything. If you have a 4 unit and there is one tenant that just ruins the rest, or is a very horrible tenant, and he makes the other tenant's life miserable, they're going to move out, and now you're losing tenants, and it's going to be harder for you to get tenants when there's a difficult tenant already in place. Okay, so that's one of the risk factors. Okay, the other thing is too, you got to recognize that not everything, even though I'm sharing you the numbers, this is very, very, very general. It really depends on the location, and real estate is all about location, location, location. If
Yep.
you are able to rent out for more, by all means, awesome. But if you're not able to because it's in a rougher neighborhood, then you got to take a real look at that numbers in the event of anything were to happen. The banks, when you're buying, purchasing investment properties, they're going to look at the reserves for your protection, because in the event that that does happen and the tenant's not paying you rent 3 to 6 months, do you have a cushion for that? Do you have a cushion for if plumbing breaks, if something needs to be painted over, if the roof shingles breaks or whatnot? The tenant's not going to take care of that. You're going to have to take care of that. So you're going to have a little bit of side money in order to cushion for those things.
One thing you brought up a good point, Lisa. One thing that you guys also have to consider, Chi fams, is when you guys are getting into your first investment property, some of those cash flow that you're making, don't spend it all. Save a percentage of that towards maintenance. Like actually go through the numbers to make sure that it makes sense for you, because not all investment properties are gonna make sense for you. Especially if you're not making cash flow and it's a property that it's your first property. Don't don't shoot yourself in the foot. Because right now I feel like, maybe you could correct me too if I'm wrong, Lisa, but I feel like a lot of landlords that's being affected a lot by this moratorium are
Mm-hmm.
first time investors.
Yes and no, because it affects everybody, because nobody expected this to happen at
Of
all, right?
course.
Nobody expected COVID. And in fact, one of my clients asked me, I was like, well, Lisa, what happened to what did you do in the last pandemic? Well, I wasn't alive. I don't even, so I didn't have to answer that, for
Not
one
only
thing.
that, but then, like, I mean, as an investor that is
Yeah.
experienced versus a newbie investor, experienced investors gone through eviction process before. They know how it
Yes.
works. They're prepared for it mentally. That's what I'm talking about. A
Yeah.
new
Yeah.
investor is not ready to evict somebody out. Like we have a client right now, Lisa, you and I, and
Mm-hmm.
she's in contract with a condo right now, and there's a
Yeah.
tenant. So that's why
Mm-hmm.
we have to be in contract for over 60 days on it, right? The
Yep.
only reason why we're in contract for 60-day escrow is because we need to wait for the tenant to move out, because I told her I don't recommend closing before, because that's not an
Yep.
owner that's living there. That's a tenant. And with the eviction moratorium being extended, if that tenant decides to stay and not pay rent, I don't want you to be evicting that tenant out, because you don't have no experience doing that. Like
Yeah.
you're just going in thinking this is my first home for my kid. You're
Yeah.
not thinking, oh my gosh, now I have to file for eviction. Oh my
Yeah.
God. So like that's one of the things that I feel is gonna probably cause a lot of investors to put the homes on the market or sell it or foreclose, because they're first time investors, I feel, and they're not prepared
They're not
for it.
prepared. A lot of people are not prepared, Chia. Even with the most savviest investors, sometimes this is a huge blow, because if you are an investor, and this is the reason why we talked about cash flow earlier, guys, it's because if you didn't cushion yourself, if you're not making enough, now you're going to have to cushion it with your own income, with your other expenses. And if you didn't do that, and if you didn't have that set aside, it may be very, very difficult. And if it's 3 months, 6 months, 9 months, it's been a year already, and they're continuously stretching it out. And once the eviction moratorium is over, the courts are going to be so inundated with backlog. So it's going to be even longer. Prepare
especially with
yourself for those things. Hmm.
especially with everybody working from home.
Yep.
they're gonna be going through the file audits from their
Mm-hmm.
home. How
Mm-hmm.
distracted do you think that person's gonna be when they're going through the files? Like right now, think of building permits, right? The only reason why building permits are taking so long is because the state workers are working from home.
Well, you know, um,
And they're the state workers, so they're probably on Facebook.
yeah. I mean, they don't hire enough people. It's not that they're bad employees or anything like that, guys. Don't
Right.
get that wrong.
That's not
It's
what we're
because
saying.
right, it's because they already have such a heavy load to begin with, and now there's even a heavier load. They're not really hiring more people. They're just asking their people to work harder, right? And
Yep.
I want to circle back just a little bit because Sadie asked the question, "What is the county loan limit?" So I'm sharing my screen right now again. Okay, Chia?
Got it. Oh, there it
So the
is.
county loan limit for one unit in Sacramento County is 598. For the duplex is 765 550. For a 3 unit, it's 925 350. For a 4 unit, it's 1.15 million. Okay, so you're definitely falling into that category. You're totally fine if you do purchase in that category. Okay.
There you go, Sadie. All for you. But yeah, I think the landlords that are new landlords, they're
Yeah.
the one that's getting hit really really bad right now because they don't have reserves. This is their
Yep.
first investment. They heard from a friend or colleague that real estate, you make a lot of good money if you're
Which you
investing
can.
it. You
Mm-hmm.
can,
Mm-hmm.
exactly, if you know how to work the numbers,
Right.
right? And so
Right.
like I think that's what a lot of first time investors are not considering when they're going in, especially with this curveball of the pandemic hitting.
Right. Right.
It screwed everything up. Maybe you were calculating everything correctly, but now that the pandemic hit and tenants are either destroying your home or not paying your rent, nobody accounted for that.
Yeah.
So that's really unfortunate. Oh, Sadie says thank you.
You're welcome, Sadie.
Yep. And how do you feel? I mean, when you're on YouTube, you're searching up real estate videos. All you see is get ready for the crash, get ready for the foreclosure crisis coming. I don't see that happening. I
So, I
don't see
mean,
that happening.
it goes back to the saying because in every single real estate market, somebody always says, I don't see that happening. I don't see that happening. We have a very, very unique real estate market during this time just because inventory is the all time low, too. Okay.
Hmm.
Inventory, it's a record breaking time where inventory is this low. And the
Yeah.
fact that everything is a lot more costly and labor is harder to find, that comes into play with that supply and demand change. And it's just a simple rule that if there's more demand than there is supply, it's going to continue to rise, right? And
Yep.
of course, there are going to be situations like this. It's not like there's no foreclosures or there's no short sales. And in fact, C and I already looked at a couple properties that are already in short sale, that are already in foreclosure, that they may have cashed
Local?
out. Yep, local here in Sacramento too, Gia. Not many, not many,
Of
because we
course.
flip properties as well, right? And we look for those
Probably
deals.
not financeable either.
No, you have to do it in cash most of the time. Okay, but when you're looking at those types of properties, there's going to be a handful of properties that will fall into the foreclosure category, that will fall into the short sale category. But when you see that, guess what, Gia? It was gone like that too. It was gone like that because people do still see the value into it. And if you are a contractor, if you know how to DIY stuff, if you know or you have somebody that can do that for you, you're going to be in a much, much better position. And now you're talking about a calculated risk versus a gamble. If you're coming in and you don't know the numbers and you're just hearing your friends and say it's like you can make oodles of dollars and you jump in and buy whatever is available and you're not really taking a look at that, that's a huge gamble. But if you
Yeah.
sit down with your lender and really take a look at all of the avenues, okay, this is plan A. If all goes well, you're going to take plan A. If plan A is not unattainable, let's go to plan B and plan C. I'll say, okay, with all these plans, what is the nest egg? What is the reserves that you have just in case, so that in the event that these things happen, you have a lot more leniency, you have a lot more time, you can afford 6 months, 12 months, and you'd be
Yeah.
okay. When the last crash happened, there's still people that were making oodles of dollars. In fact, there were savvy investors that were making much more money on a down market than on an up market. Okay, and the reason being is they know how to utilize, just like how you guys would monitor the stock market. People want to buy low and sell high, right? So you got all these investors now with YouTube, now with social media. People are getting more and more
Hmm.
savvy on how to invest in real estate, and therefore upping that demand and limiting that supply again. Just like you said in the beginning of the
Yeah.
show, Gia, in every single show, there's a few hundred houses that are just popped up on the market, but there's a few hundred more that are pending and a few hundred more that closed in the same
Yeah.
week.
It's like we're going in the negatives of inventory each
Yeah,
time.
yeah,
Always. I mean, sometimes those homes that are pending falls back onto the market, and it can construed with the data a little bit to be a new listing, but
yeah,
technically it's probably been on the market for a long time, right? To where it
right,
just kind of came back, so now it became part of the new data. So it really depends, but overall, just know that we are still low on inventory, and we are still in a strong seller's market
right.
for, yeah.
It's crazy because Chi and I alone, we have more clients than what's out in the inventory right now.
Oh my
So I
god.
can't imagine if every realtor and every lender had that type of volume too combined. And these are just normal numbers and not anything extreme, right? These are just normal numbers. Everybody is trying to get in. There's thousands, hundreds of thousands of people trying to get into it, and there's only a few hundred that are on the market.
I know all of our clients right now, Lisa, that are
Yeah,
qualified, they're waiting for new listings to come. The moment a
I
new listing
know.
come, it's probably like one a week, right? And then sometimes they're lucky they get like 5 new listings a week that's in their criteria.
Yeah,
If it's not the one that fits their criteria, they're not gonna go see it. It's another week of waiting. So right
yep,
now, there's so many of our clients right now that are just waiting on the bench for more homes to hit the market. And the moment it hits the market, it's like, okay, chill, let's go look at this home right now. All right, let's
yeah,
go. You know,
yeah,
so that's what's going on right now. I I feel like because everything just opened back up, right? Since June
yeah.
15th, everything opened back up. You don't require a mask anymore if you go to an open house. We don't require a P form signed anymore. Oh my god, awesome! I love that. That was an extra step that I did not like at all. For every home, we needed a P form signed. Oh man, I hated that. But anyways, I'm glad that's gone. But I think because everything has opened up now and everybody is excited and ecstatic to go back to vacation,
Oh
I've
yeah.
noticed I've noticed some buyers have decided to use some of that money that they were initially going to buy a home with to plan for vacations now.
Oh, absolutely. And RV sales have went up,
Mhm.
up the roof, okay? You
Oh my
can't find
gosh.
one. It's very, very hard to rent. Everybody's
Oh yeah.
converting their vans and everything like that too, because it's just been so crazy. And like I said, when it opens up, it's like release the Krakens. Everybody wants to come out and
Exactly.
play.
That's what it happened. It's like a bunch of zombies just walking
Yeah,
through saying, "Oh
yeah.
my god, we're alive." Right?
I know.
And,
I
and
know.
so
Traffic has
I'm
gotten worse.
yep. And why am I sharing this, Chichi fans? I'm sharing this because if you're in the market to buy a home right now and you are not planning on being part of that group, keep looking. That means less competition for you.
Yeah,
If your competition is out there having a great time and you're out there still grinding and looking at homes, less competition for you. You might
right.
be the person that is only looking at that home, and your bid might not be the best bid, but it's the only bid that seller's gonna get because everybody's on vacation. So think about that. That's why so many people wait till wintertime to buy a home because they think wintertime is the best because everybody's saving their money for holidays and gifts, which is true. But
Yeah.
if you're the buyer that knows that everybody is doing that, don't follow the crowd. keep looking at homes because you might get a deal. Because sellers that need to sell during that time need to sell.
Right. And earlier, Chia, you mentioned some of the houses went back on the market
Some,
because
yeah.
it fell through. So let's talk about that a little bit and why that happens, guys. Because if you are purchasing a home that is that isn't that's very, very popular, so people actually want to live there, that means less houses are sold in that neighborhood. So when the appraiser comes back and look at the comps, they're looking at homes that are already sold. And if homes didn't sell in that area until like 6 months ago, the appraiser hasn't caught up with that. So the value hasn't caught up. So a lot of times these houses, they're like 500,000 purchase price, but the value comes in at only 450. If you haven't prepared for paying that appraisal gap, then it goes back into the market. Or if you didn't do your due diligence and you went to a lender that didn't do all of that due diligence, check all your paperwork and everything like that, and halfway through your escrow, you find out you really truly don't qualify, that is going to hurt because you spent money for the appraisal, you spent money for the inspection, and now you don't have a home. So now it goes back into the market. And I've been a save a lender several times for deals where people are like, can you double check to see whether or not they really truly qualify or not or anything? And half the times it's so unfortunate because it's situations that you should have seen, or the person that you work with should have seen up front.
That is very true, Lisa. Like, it could happen. Another thing buyers would all automatically assume, default, when a home comes back on the market is, did something happen to that home? Is something wrong with that home? Is it haunted? Does it have like a bad juju there? Is it like bad feng shui? Like, I've heard it all, but there's a lot of variables why a home gets taken back and it falls back into the market. There's a lot of variables. So the best way is to have your agent call that listing agent or seller and find out why it came back on the market. And sometimes, I'm just saying sometimes, not all agents or sellers are going to tell you the truth. They're not going to tell you, let's say, like for example, let me play a scenario for you guys. Let's say you get into contract with a home and you found out there was $50,000 worth of dry rot that needed to be done. Seller says, heck no, take it as is. And you cancel. And the next buyer comes in and says, hey, seller, why did it cancel? Why did it come back on the market? And the seller says, oh, the buyer's finance didn't go through. They could lie about that, but you wouldn't know whether they're lying or not.
Mm-hmm.
So it could probably be because of the $50,000 repair that they didn't want to do, but they don't want to share that with you because why? You're not gonna want to continue on with the home anymore too. So you're gonna want to just say, okay, never mind. If you're not gonna address that $50,000 difference of repairs with the initial buyers, then we're out. They don't want to hear that from another buyer.
Right.
So what do they want you to do? They're gonna want you to eventually hire your own inspector and pray to God that your inspector don't find all those damages, because inspectors are still human at the end of the day, and not every inspector is diligent, and sometimes they do miss, and that's the type of inspector that seller is hoping for, so that way they can sell the home, so that is a possibility. I'm not saying everybody does that, but some people do. There's bad apples everywhere, and you just gotta make sure that you're well represented and that you have an agent that looks out for your best interests. Sadie says, is demand down now since more people are traveling now? It depends on the market, because there's so many buyers out there, Sadie. Not every buyer is looking for the same house. Some buyers are investors like you. Some buyers are looking for a 2-bedroom condo. Some buyers are looking for a 4-bedroom house. So depends on the market, the niche, and the area, really. But yes, I have noticed that the lines of buyers waiting to look at homes is not that drastic like how it used to be before everything opened up. So it's a possible chance that demand is down.
Right. So what I'm seeing from the lending side and everything like that too, Sadie, you're right. Once everything opens and everything, people kind of like step out of the line. There's people who step out of line to go vacation. They took that money to do other things. They went to buy an RV instead and said, "Hey, I'm just going to plop my RV on a piece of land because I'm so tired of waiting and standing in line." That's true. However, of those of in that line, there was hundreds of thousands of people. And remember, there's only a few hundred houses. So even
Come
now,
on,
it's not a
yeah.
100,000, but it's still roughly about 10 to 20,000 people that are still in line. So the demand is still high, just slightly less high than
People are
before
taking a
everything opened up.
break. You could call
Yeah,
it that, Sadie. People are
exactly.
just taking a break.
Correct, correct. And
I've been looking at homes for the past 6 months. Everything's open up. I'm gonna go on
yep,
vacation for a week and then I'll come back and rejuvenate. That's really what's going
exactly.
on. Not
Yeah,
that demand is down, it's that everybody's taking a break. But
yeah,
if you are that buyer that is not taking a break, it might be your time to snatch up a deal right before the traffic gets back up there again.
right. Yeah.
That's what I'm saying.
Yeah, they haven't given
And
up completely. They're just going out of line a little bit and then coming back when they feel like it's a little bit cooler. But they're going to come back when everybody else comes back and they're going to find themselves in the same
yeah.
situation. So if you are patient and if you are ready, this is the best time for you. Okay. Or a better time, I should say, a better time for you to come in and just stay patient, just stay in the line so that it moves a little bit faster for you.
So what are the action steps for you if you are in that boat? Go out and look at homes every day with your agent if you can. Because again, any day now, those buyers that are taking a vacation they're gonna come back home eventually. Okay, that money's gonna run out quick when they're on vacation. They're gonna come back home quick, and when they
Hmm.
do come back home, you want to make sure that you're already in contract with the home
Yep.
while that traffic is gone. Because especially with the data right now, homes prices are going up on average 4% every month, y'all.
Hmm.
4% every month. So you just gotta ask yourself, how much time do you really have? Because prices are going up, but your income is staying the same.
Yep.
Interest rates is also not staying the same. It's changing too. What's the average interest rate right now? 2.7, 2.8?
So for a 30-year right now, it averages roughly about 2.875. I mean, it depends on your credit, guys, and it depends on your debt to income ratio and things like that too. But I would say that that's the average right now.
Got it. Well, Wayside Lore says, "Hi guys, hello Wayside. Are a lot of houses that are pending that's being appraised coming in at value, or the buyers have been paying for the difference?" Good question.
Hmm.
Majority of buyers that I know are paying the difference. We have a client
Yes.
right now, Lisa, that's paying
Hmm.
10 grand.
Correct. Correct.
10 grand outside of appraisal because that's really the game right now, Wingside. Unfortunately, um, if you want to win the housing bid and you don't want to continue looking with your agent because you've been looking for months and then you're tired, you're frustrated, you just need a home right now, you have to compete in that sense. So that means you have to have cash. If you're very fortunate, you might be lucky enough to where you come across a home that there is no competition at all, to where you might not need to come out of pocket, but you need to find that home though. It's so unique. Okay, it's very unique. It's not all guaranteed, but majority of homes right now, people are paying cash outside the appraisal gap difference. So just
Yep.
FYI, be prepared to have at least 5, 10, 15, $20,000 cash.
Yep.
Hope that answers your question. Thanks for the comment, by the way. Man, so our client right now, since we're talking about that client, she's having to come out of pocket $10,000. For her, it's a blessing
Yeah.
because our offer was like way above that appraised value. And she
Right.
wasn't really comfortable with the mortgage payment, right, Lisa?
Hmm.
So the
Hmm.
fact that it appraised lower and her loan amount is based off of the appraised value, it works out perfectly for her because her monthly payment now is something that she could afford for her and her family. This is her first home. She's going to get out from the rental status
Mm-hmm.
and eventually start building her own equity. And when the market starts slowing down again, when she starts having enough equity, she's going to sell this home and upgrade and find the home that she actually really, really wants. So she is playing the long game. And this is a average like first time home buyer, y'all. The average first time home buyer don't have deep pockets. They
Yeah.
have enough for the 3 to 3.5% down and enough to cover closing costs only.
Yep.
But she's playing the and she understood that. And I'm glad that she understood that, right? Because it makes it so much easier for her to find a home. Because what? We've been out looking at homes less than a month and she got a home. She didn't have to wait months and months. So
Yeah.
she's so excited.
Yeah.
So I'm so excited for her and her family, and
I
she's
know.
so
We're very
nice.
excited.
And so like, that might be what a lot of first time home buyers right now. What a lot of you guys might have to do is, you know, buy something that you're comfortable living in now, to where it doesn't change your lifestyle too much, and then just build equity. When you sell it, use that equity to down for a bigger home that you eventually wanted for you and your family, and then stay there, and then go from there. It's not a race, right, Lisa? It's a marathon. It doesn't matter
Absolutely.
how fast you get that dream home of yours. It's like the process and the journey of going through that. I could guarantee you when you're doing this, you're going to be less stressful, because the last
Yeah.
thing you want is to get yourself into a house that you're actually losing money on. Like what me and Lisa shared 2 weeks ago. Just because you're approved for it doesn't mean you should actually buy it, because you might be losing money after you're paying all your utility bills
Yep.
and food and gas. So if your lifestyle doesn't change, just play the long game. I mean, unless you have deep pockets and ignore everything I just said, go ahead and buy that dream home because you can handle it.
Yep.
But majority of first-time home buyers, they cannot handle it. They don't have deep pockets. So, you have to tread carefully, and that's how you do it. Play the long game. Couple years goes by so fast.
Oh yeah.
And I think I'm gonna close with that, Lisa, unless you have something else you want to share.
No, that's pretty much it. I hope that TG fams, you enjoyed that and that was helpful to you. And again, if you have any specific scenarios to yourself, please feel free to reach out to us. We'll be more than happy to price that out for you.
Yep. All right. Me and Lisa are always here for you guys. Again, that's why we do these live streams. Last week we got a little busy. I went camping. Lisa had some stuff going on with the internet, everything. So we're now back. So yeah, miss you guys. Glad we're back. If you guys have any other questions for us, we will see you guys on the next live stream. Okay.
Be
But
safe, guys.
with that being said, yeah, be safe. Happy
Mm-hmm.
4th of July. Don't go and burn your new home that you just bought, okay?
Yeah, don't do that. Don't do that.
All right, Chi Chi fans, take care.
All right. Bye, everyone.